Hello traders, welcome to the series of educational videos that FXCM has for you. My name is David Londoño, I'm a trader and a market analyst, and today I would love to talk to you about my personal strategy for sideways trends. Now, they typically occur during a period of consolidation before the price continues a prior trend or reverses into a new trend. So we will be using the Asian session. We usually see that kind of sideways moves before the London session where the big and explosive moves occurs. Now, before we go to the strategy, just remember that these are not trading ideas. They're insights that will help you through your trading path and development. So let's go for it. First of all, we will need to identify buy side and sell side liquidity. And which are those? We can find them or our older swing highs and swing lows. Why we'll be considering this as a liquidity zones? Because as you can see, most of traders will see these as support and resistance points. This might be considered as a great resistance point. So a lot of traders will be buying here, right? But we see this as liquidity because if you trade over here, you will be placing your stop loss down here and down here. So just on these points, there is money under those points because this is where the stop loss are placing or being placed. So now that we have our buy side and our sell side liquidity points, we will be wait for the first capture and a change of the structure after that. And that occurs just right here. This is the point where the buy side liquidity was captured, and after that, we will see the change on the structure by capturing this swing low over here. And we also have to wait for the gaps that will show you the displacement strength, and you will see that exactly occurs in order to change the structure. So this is something we definitely want to see. And then we can find or identify our key points. It will be premium, equilibrium, discount points. This will give you the entrance and the stop loss prices. But what's premium, equilibrium, discount? So we have to place our eyes into the entire movement, where it begins and the moment it captures the liquidity we wanted to see captured. Now, the 50% of that movement is what we will call the equilibrium point. And above that, we have premium prices. Below that, we have discount prices. And as you can see, as I was telling you about the strength of movements, you can see that exactly above the equilibrium point, the price needed to make this for value gaps points. So once you see this was taken or breaking, this is the insights we want to see in the price, right? So over here we have our confirmation that the price want to now take the sell side liquidity, and we will just have to wait for our second confirmation. It will be again that fair value gap that will show us the strength we need. It happens just right here. And there, we could even use our Fibonacci. I call it the OTE, the optimal trade entry points. This happens between, show you just in a second, this happened between the 0.79 and 0.705. And you can see how it beautiful goes just right there. And then the movement starts going again. So we can definitely place our trade just right there. After all the confirmations I showed you, we can be using this this order block just right there and place our stop loss in the swing high that also capture buy side liquidity. As you know, the market is completely fractal. So what happened here, exactly the same movement happened there in lower time frames. We were talking about seconds because this is 1 minute time frame. But exactly what happens here is what happened there. A buy side liquidity was taken, and then the strength of the move was shown. So this is the second confirmation I was telling you about. So after we put our trade just right there, what's the exit or the points we are attacking? As I told you before, attack the buy side or the sell side liquidity that's untaken. So if this buy side was already taken, we're going to attack the sell side. And also with the Fibonacci, we can see how it beautiful matches with the sell side liquidity just right there. So that will be our take profit point. And this is a beautiful trade, 3.8. And well, we have to have very patience to see all of these in place. But once that all of them occurs, it's a high probability type of trade. You will definitely need a lot of patience to see all of this. If something of this doesn't happen, you will just not take the trade, and that'll be all. You just have to follow the rules. 1, 2, 3, 4, 5 simple rules for finding your entrance, your stop loss point, and your take profit points, right? So again, try this strategy and always do a lot of back testing on it before you put real money into the strategy. Always start with the demo and do a lot of research before. I hope you find this helpful for your trading strategy as well, and I'll see you in the next video. For now, have a profitable week. I wish you good luck and good trading.